Good afternoon, guys, and welcome to this week's edition of our weekly forecast, where we're going to be looking out for what we anticipate the market to do in the coming week. So following up on last week's analysis, where we had the dollar rejecting the 96 price zone, which is a strong demand level, and rallying back up to the upside all the way to 97.50 price point. So we could see that dollar since 2 weeks ago, dollar has been a bit strong. It has rejected lower prices, meaning there has been appreciation in dollar value. So now in the coming week, I'll be looking for dollar to at least trade a bit higher again in the coming week. That means I'm anticipating a strong dollar, but we could see Monday or Tuesday trading lower, and then as we head into NFP on Friday, I'm expecting dollar to appreciate in value, mainly due to the fact that the economy of the US is opening up bit by bit. There's like the opening of the economy, meaning a few people are going to get back to their employment, a few are going to get employed. So yeah, as much as there's a lot of people who have lost their jobs, there's going to be a bit of positive news coming out of NFP on Friday. So that's when I'm anticipating dollar to at least appreciate in what? In value. But we are going to see a bit of downside move in the beginning of the week. So basically what I'm saying is I'm anticipating a bullish weekly order flow on dollar index. So I'm looking at our weekly chart. You can clearly see the rejection that I've been talking about. We have had last week there was a weakness all the way down to this level here, but dollar eventually pushed to the upside. It rejected again the lower prices close to 96 price zone, meaning dollar was bullish from last week. So now I'm anticipating probably a drop to this level here before we see a rally to the upside. You see, we could see dollar trade back to 97.20 before we anticipate a move all the way probably to 98. But that all depends with our Monday's range, like how we are going to see Monday trading. So now if I go to a daily time frame, there's 2 price points that I need to highlight for you to be well aware of, and it's these two equal highs. Along those two equal highs, just like what I said on the last night's mentorship analysis, there's buy stops above those equal highs, right? We've got buy stops, of which you can see how price is creeping to the upside, right? So last week we had Monday and Tuesday bearish. You can see the two bearish candles to the downside. That's Monday and Tuesday's trading range. And then Wednesday and Thursday and Friday we had 3 bullish days, but only Wednesday had a strong bullish day. Thursday and Friday there was a loss in momentum going to the upside, meaning we could see again the same process repeat, where we have a bearish Monday and a Tuesday also being bearish before we see a strong rally to the upside. But now, what if the buy stops are taken out, right? If these buy stops are taken out and we have price closing above 97.80, then we could see a proper move to the upside as we head into NFP. But now, if the buy stops are taken out, there's buy stops here, right? If these buy stops are taken out and price close below, right? Let's say there's a wick and then we have a bearish close after taking out the buy stops, then we could see price drop down to 97.20 or all the way to 97.40 or 96.40 or 96 price point. So when you're doing your analysis, guys, make sure you've got tools or a picture of what you anticipate the market to do after taking out certain levels. You don't just go blindly into your trading day. You don't go blind. You must go with an arsenal of tools so that you know exactly what to do if certain conditions are met during your analysis. So we've got buy stops above here, right? We've got buy stops, and these buy stops are above here. I'm just gonna make it a proper dashed line. So we've got buy stops above 97.705. We've got buy stops lying above there. So that price range is very critical to our analysis, right? If this range is taken out and price close above, then we are seeing further rally to the upside. Remember, we've got our weekly level here, which is marked by a dashed bigger dashed line. That's our weekly level. If price close above that level, then we're gonna see a whole lot of move all the way to 98.30 price point, which is our next strong area on a weekly level. So I'm gonna go to a H4 time frame so that we can see properly what we are talking about. You see, already we have a rejection, but now the stops were not taken out, meaning there's still liquidity above there. You see, we still have liquidity, which is our buy stops. If price does not go and take out the buy stops and starts trading lower, then as long as price is trading above this range on an H4, as long as price is trading above the 97 price point, then anticipate bullish moves, right? Why the 97? We had a breaker here, this candle here, which broke to the upside. You see, we had a bullish breaker to the upside. So as long as price is staying above this level, then anticipate bullish momentum all the way to 98. But if price does close below the 97 price point, then expect a further fall to the downside all the way probably to 96 and taking out the sell stops below, this level here. You see, we've got sell stops below 96.32. We've got sell stops located there. Let me just mark it out so that you can see clearly. So we've got sell stops below the 96.30. See, we've got our sell stops there. So if price does break and close below the 97, then anticipate those stops to be taken out. But yes, this could happen, and you need to be ready to exactly make sure you make a trade decision based on what I've just analyzed and described to you guys. So I'm gonna go to a H1, to a lower time frame, right, so that you can clearly see. So as long as we are above 97, anticipate bullish moves to the upside. If 97 is taken out and close above, then that's an entry to the upside. If 97 is taken out and close below, market is strong bullish to the downside. So we'll be anticipating the sell stops below 96.31 to be taken out. But as I said, I'm anticipating a bullish weekly order flow in dollar index, meaning we're gonna see an appreciation in price on dollar index. So yeah, that's pretty much about it on dollar index. I hope you've understood well what I'm trying to put forward. So what does that mean? When we come to the yen, I'm gonna go straight to USD JPY H1. Since we are anticipating a bullish weekly order flow on dollar index, it means I'll be anticipating bullish moves to the upside on yen, meaning long positions are ideal on the yen. And we can already see we've got buy stops there. We've got buy stops located above 107.447. We've got buy stops located above there. Let me just highlight. So this is straight on an H1, guys. You have to be in a position to analyze all this from a higher time frame. Me, I'm just going straight to an H1 because I've already done my work on dollar index, which gives me a picture of how I'm gonna trade the yen. And then we also have sell stops on those two equal lows. You see now the same setup on dollar index. Remember, these guys are correlated. The same setup on dollar index is practically the same setup that we have on USD JPY. So we got our sell stops and our buy stops above 107.44 and our sell stops below 106.79. So that's basically 106.80. So if dollar trades to the upside and take out those buy stops above 97, the buy stops above 97.73, if I'm not mistaken, 97.70. If dollar trades above, then we anticipate yen to also trade above and take out the buy stops. And if it closes above the 107.45, if yen close above 107.45, then anticipate price to move all the way to 107.90. But if dollar trades below and close below 97 price point, then expect the yen to trade lower and take out the sell stops below 106.80. And if it closes below, then you're looking at 106.60 and all the way to 106.30 price point. Now looking at the Euro USD, it's literally the opposite. If we are bullish on dollar index, then this is my last down candle. Then we're going to be bearish on fiber. So this is where our sell stops are located. When dollar is trading higher, we expect Euro USD to trade lower. So we've got our sell stops located below the $11.91 price point, and then we also have buy stops on these two equal highs here. We've got our buy stops. So we've got buy stops above the $12. So if dollar trades higher all the way to 97, if dollar takes out the stops above 97.80, then anticipate Euro USD to trade lower and take out the stops below the $11.92 price point. But if dollar trades lower, to the downside and close below 97, then anticipate euro to appreciate in value and take out the buy stops above $12 and probably rally all the way to $12.80. So that's the analysis on these three assets that we trade on the group. And with these three assets, especially with dollar index, guys, it will be very easy now for you to be looking out on how to trade say gold. As you can see, gold, we're expecting bullish moves, and look how price dropped down to the proximal level of our supply zone. Look how price dropped down. That was the level which was broken and closed above. You see, this is our weekly supply level. Stops were taken out, buy stops on these equal highs taken out, and when price came back to 1744, I think I mentioned this in the group, 1744 or 1747 if I'm not mistaken, that was a good entry to the upside on the precious metal, because it eventually rallied all the way 240 pips. So yeah, this proximal line which has been violated here will still offer great opportunities to go to the upside on gold, meaning long positions from 1747 are ideal. But if price does close below, then expect price to trade all the way to the equilibrium of our trading range. So yeah, that's pretty much about it, guys. And for those with any questions, you just send me a message on Telegram or email or WhatsApp for further clarification. That is for those in the mentorship group. And if you haven't joined the mentorship group, you can send me a message or email on how you can get involved with the group. We are pure price action traders, guys. We don't use indicators. Yes, there is some time you have to do your confluence with some indicators, but I always urge people to read what the market structure is telling you. Be in a position to analyze and read the market structure and make a decision using what the price is telling you, not what a lagging indicator is gonna tell you. So yeah, if you haven't subscribed to the channel, kindly subscribe so that you get notifications each and every time that I upload new content. I'll be starting a series on certain criteria that we have to look out for when price has reached an interesting level. Say for instance, we are anticipating dollar to trade all the way to 97.70. I mean, what kind of price action do you need to see? So I'll be starting this series on YouTube in the coming week or so. So you must look out for that, and kindly subscribe so that you don't miss any of those series videos. So with that, guys, I wish you good luck and happy trading. Thank you.